Good morning, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the morning of Sunday, the 6th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay, we saw a very unusual couple of days. Hopefully, all of you were forewarned by the posts I did on Tuesday and Wednesday, in which I was talking about the downside targets on the US indices, which were pretty much all made on Friday. Now, that puts us in an interesting position. It's very rare that we actually see 10% down in 2 days. Very rare. I think basically, we're just talking about 2020, 2008. I don't think it managed it in 2000, and it did do it in 1987. So what I'm going to do is I'm going to have a look at all those today. In the meantime, we made all of the topping targets that I posted on February the 19th. The final one was Dow, which was made on Friday afternoon. And we made the IWM one on Friday a bit earlier. So pretty oversold here. Likely to see a bounce soon. No current positive divergence. I'm thinking we'd see a rally and a retest probably before we saw that, but it all depends where it closes up. Where it opens after the weekend. Sometimes after a weekend, you get a big gap up, and it's not possible really to retest the low. But that's where I'd be leaning towards seeing, and maybe going a bit lower. I'll be talking about targets for that. So NQ pretty much the same. RTY pretty much the same. YM pretty much the same. DAX made the double top target, which looked ambitious when I initially posted it, but went significantly below it. The target was at 21,250, and it actually made it down to 2,500. We didn't have a topping pattern on ESTX, but it was undeterred and went down anyway. We've got a possible 60-minute buy signal brewing on ESTX, and we've got another one. We've got a possible 60-minute buy signal brewing on DAX. Sorry, I haven't marked that one in. All right, let's have a look at those on the bigger picture charts. Now, first, I'm going to have a look at the 3SD band setup. So, okay, this is, hang on, wait a second. Right, let's have a look at 1987 first. Oh, just firstly, on the secular bull pattern, I posted this last week, and I was talking about, hang on, wait a second. Is that where it is? No, it's gone below. Okay. And I was talking about this secular bull pattern of the rising wedge. And I was talking about the possible target down here in the 4,000 area and why that was an important target area in any case, and might become more important as we form a possible topping pattern here. You can see the head and shoulders that I was talking about. This was the left shoulder, this was the head, and we reached the ideal head area. That was the target in the 5100 area, and we overshot that a little bit. We also break through this trend line here, and this obviously clears the way to head down to this trend line here in the 4000 area. Now, I'm not saying we're necessarily going to make that this year, but I have to say I think the odds of continuing to top out here and then heading straight down to it aren't bad. All right, let's have a look at the 1987 chart. Now, this was when it went down here, and what I would note here is, of course, we'd seen a couple of big weeks down, but it was only on the third big week down that we saw an actual punch below the 3SD lower band, which is what I'm looking at here. I'm not so much looking at the Pinocchios of price going lower, which went a lot lower. I'm talking about where it closes, really, because there is a quite strong tendency for this to close back above the band, which it usually does, but it didn't in this instance, and it didn't on Friday either. So what happened immediately after this? Well, that was the low that week. So we came down, we came pretty close to a retest, and then it went up. So we made a significant low there. Okay, let's have a look at 2000. I don't think we actually have a qualifying decline here. Well, we did kind of in 2001 actually, but I don't think we lost 10% in 2 weeks, did we? Hang on 1 second. Let's close here. About 11:30. Actually, we did. Okay, this was in 2001. The second one was a break below, was a punch below the 3SD lower band. Again, we made a significant low there. I mean, this one was just a rally, but it lasted a few weeks and then came down. So what I'm saying is here is I'm leaning towards seeing a rally, and I'm looking through the prior examples to see whether that supports that. So far, that's a yes. Okay, looking at this setup here, this was obviously a significantly more than 10% decline. I think we might even I think top to bottom in one of those days, I think we did well over 10% in a day. Yeah, here it is, 1100 to 900. Wow. That was just astounding. But here, of course, again, we closed with a punch below the with the 3SD lower band. Now this is on the weekly chart I'm looking at on all of these. Now again, that led to a rally that lasted about 4 weeks, and then we went lower. And we were making the final lows of the bear market there. But again, this has a tendency. I was writing about this 3 weeks ago when we saw a punch below the weekly lower band, and I was talking about the strong tendency to have a rally. Now here, I'm looking at these are some of the most extreme moves we've seen really in the last 50 years. And these are still having a very strong tendency to rally. Okay, let's have a look at, I think this is going to be 2020. Okay, now here, we had a punch below and we continued down, but I have to say that was COVID. I mean, that really was a massive shock to the system. But nonetheless, we do have an exception here where it continued down and made a very strong further low the next week, and that needs to be borne in mind. But I would note that here we didn't see a punch below the band. We closed slightly below it, but it wasn't really what I would call a punch. The punch was here, and that was pretty close to the low. So anyway, that's what I just wanted to start off with, and let's have a look at what I think the targets are here. So let's have a look at that. But what I'm saying is that historically, the odds of seeing a decent rally here aren't bad, and this was one of the things in which my my forecast last week and projection of how it might go was based. Okay, in terms of the weekly 3SD lower band, that closed at 5166, and SPX was almost, pretty close to 100 handles lower. That is a punch, no question. So I'm looking for a rally here, and really, I've got one of two targets. Now, the first one is the one I mentioned, the 5100. This could be a head and shoulders, and the left shoulder had a high in about the 5660 area, and I was thinking we could do a right shoulder and then continue down. The other one was here. And that's down in about the 4960 area, and I'm thinking we might go down to that. We already managed to get below the 5120 area approximately, which was the target for the other one. This is the alternate head and shoulders, and I got to say I prefer this one on NDX because actually we've got these double potential head and shoulder necklines on all of SPX, on the Qs, and on Dia as well. So let's have a look at those. All right, looking at the Qs. Well, I'll look at it on NDX. We've got this neckline here, and we've got this neckline here. You can see that on the Qs as well. Basically, it's 421.55, which basically we reached at the end of last week, and 410. I'm thinking it might go down to the 410 level and then deliver a rally which is perhaps shallower, but should still last weeks. If you look at this, one here, actually let's have a look at it on NDX because that'll be easier. How long did this rally last after basically from getting to from the neckline? 1, 2, 3, 4, 5, 6, 7. I mean, there's still quite a few weeks. So I'm thinking we might see a pause here. I'm thinking in terms of a rally of taking at least a couple of weeks. It could be 3 or 4. That might be too long. We're still looking at a seriously disappointed and pissed off market here. And maybe it'll just carry on down like it did on COVID, and maybe this is equivalent, this tariff shock, to COVID. But I got to say, there is a very strong historical trend of seeing these punches down below the weekly 3SD lower band, and then seeing a rally start shortly afterwards, which lasts weeks. And delivers a decent rally. And I'm thinking we may well see that here. Obviously, every time is different, and looking at history doesn't actually tell you the future. But nonetheless, it is a very, very strong tendency, and I would tend to respect that. All right, in terms of dire, we've reached one head and shoulder neckline, gone slightly below it. I've got this one at about 38,500 area, and I've got the second one down here, which I've marked in because it is my preferred one. Ideally, we'd get down to the second ones on all of them, so that would be 49.60 on SPX, which is not far lower. We saw that quite a few times after extension lows like this. I've got that target in about the 410 area on the Qs, and on dire, I've got that target in about the 370 area, and we made it down to about 380. I really like that, and that would be ideal for setting up a head and shoulders. Why do I think we're going to set up a head and shoulders here? Because I don't think we're done to the downside. I think we've got significantly more, but it doesn't have to be done now. So I think we're going to see a decent rally here, depending on news, because unlike COVID, it's not, the pandemic was never just going to go away, but tariffs could. And that is something that needs to be borne in mind. This is very, very much a news market. And if we see some very good news on tariffs, then I'm thinking that we might see a decent rally, possibly even a retest of the highs, although I think we'd be coming down afterwards. Do I think the tariffs will get cancelled? No. I mean, one of the things, I'm going to publish on Monday a letter that Donald Trump wrote and paid to have published, an open letter about tariffs and defense and this. And really, this was in 1987. 37 years ago, and he was already talking 38 years ago, and he was already talking about the tariffs. He was talking about, making the foreign partners pay for defense and all this sort of stuff. I mean, these are the themes of this year. These are very, very long-held beliefs. I don't think this is going to be going away in a hurry, but we will see. I think we are going to have a serious experiment, and I think we'll go a lot lower while we do that. But I don't think we're going to necessarily do that immediately, and I am leaning towards seeing a bounce. Okay, in terms of the other charts, don't have a lot in support trend lines yet. I'll have a lot after the next low. But what I would say is SPX obviously has made the target, and we broke the trend lines I was looking at as potential support. Qs, did we break that? Yeah, we did. Pretty convincingly, actually, and obviously that had already made the double top target on dire. Again, we had a couple of nice trend lines. Again, they are toast, and we actually, sometimes you can see a trend line in, not because it hits and bounces there, but actually you can see this one here, when it went through, it was back tested twice. You can see that, yeah. You often pick up a trend line after it is broken, looking at that, because I've drawn that in already as a possible trend line, and here we've got it being broken and gapping through it and then back testing it twice. So anyway, interesting. It's just an insight into the nature of trend lines. But again, we had a double top target here, and we made it. That was at 384, and that's done. Okay, let's have a look at IWM. IWM. We had a head and shoulders target down here at about the 183 area, and we got down to 176. So these are all done. IWM is the one that I'm not looking for head and shoulder here, but I am thinking it would likely bounce with the others. I've got a possible trend line marked in here. I'm not taking that particularly seriously. I'll be looking much more carefully when we've made something that looks like a low and might deliver a decent rally. Until then, it's going to be hard to define the trend lines. But what I'm not looking for here is a head and shoulder pattern forming, because it's just not in the same place as the others, not even close. So I'm watching to see what happens here, but I'm leaning towards seeing a bounce. But you can see what it was doing in like 22 and 23 was very, very different to the others. And then we had this amazing rush upwards. I'm not expecting that to be, well, I'm thinking we may well get down into this area, and then I'm thinking we may well find support in that area and hold it. We will see how that goes. All right, great. Let's have a look at DAX, which had a very pleasing decline. We had a head and double top there, and it made the target. Looking at the bigger picture chart, that is a hell of a decline. So DAX has joined the decline party now. and we saw a significant break below the weekly middle band. On the monthly, again, that's, we're talking about a big candle, although obviously the month hasn't ended yet. And the next big support I'll be looking at is this support in about the 18,800 area, which is the monthly middle band. But this is a nice reversal. The daily sell signals, we had both of them, RSI 14 and RSI 5. They've made target. I've still got a weekly sell signal, which hasn't made target yet, but all the main sell signals have already made target. That doesn't mean we're close to a low, and I doubt that we are close to a low, but I think we're probably looking at a rally here. Okay, looking at Nikkei. Wow. Again, that's going to be below the 3SD lower band. I'm looking for a rally here. Could we be forming an overall flag here? Maybe, although it's kind of deep. This first move on the flag, but I am wondering if we might possibly form a flag or a triangle here. So I'll be watching, but if we were forming a flag, then we could get down. Too big for a flag probably, but we could be forming some kind of a declining pattern before this index heads up. We'll see. All right, great. Let's have a look at let's have a look at CL. Okay, looking at CL, we've got we had a strong decline. I've been talking for weeks about a retest of the low at 63.57, and we got it. No current positive divergence, but this is an important inflection point, which I'll talk about on the daily chart. NG, we are retesting this low. I'm still leaning towards the upside, but we could see a hard breakdown here. And obviously, while we have a beautiful double bottom target up in the 5.75 area, a decline in economic activity, which is what is affecting oil after all, and copper here, isn't actually that great for natural gas either. We've got a nice looking double bottom target at 5.75. It may be that we break down here and we don't make that target. We will see. Could this be a head and shoulders here? Yes, it could. Hasn't broken down yet. If so, we will see whether it does. Okay, let's have a look at those on the bigger picture charts. Let's have a look at oil first. Now, oil, this was a wedge, we've underthrown it. This could be a low, and this could be a double bottom, which could be setting up with a target back up in about the 130 area. Does that seem plausible if we're just aware going to see a slowdown in the world? Maybe. I think I'm skeptical about that. I am wondering whether we're going to break down. And if we do break down, that's good news for Ukraine, because Russia, of course, is paying for its war with its oil sales. So I'm wondering if this is going to break down here. I think with the tariffs having come in the way they have, and looking as though there's going to be at least a several-month experiment with those, then I think the prospects for economic growth for the rest of the year are not that great. That is quite possibly going to drive the price down of oil well below 60. But it's holding 60 for the moment. We'll see whether that continues. No current divergence. This is the wedge I drew, and this is a potential bullish underthrow. But I'm just skeptical about oil starting a big move up from here, given these current overall economic circumstances. Okay, natural gas. This is the nice looking double bottom, beautiful target at 5.75. I don't have any negative divergence saying it isn't going to make it. But it's possible, of course, that it won't make it. What I'm watching here is the double top, which with support in the 380 to 385 area, and if we see a hard break below that, then I'd really be looking for a minimum target at about the 315 area. And we could make that. So we shall see. All right, great. Let's have a look at metals. So let's have a look at GC. Now, a week ago, I was talking about a couple of ominous-looking charts, GDX, particularly where there was the suggestion that we might see a significant decline, and we have seen that significant decline. Could go down further. I would say if it is going to go down further, then again I've got a possible head and shoulders forming here, and ideally we'd see a right shoulder high here. It would get up into about the 3090 area, and then it would fail. And if it did fail, we'd be looking for a target which would be down in about the 2840 area, I think. Okay, looking at silver. Silver, we saw a very significant decline. Now, this is something I was saying last week. Obviously, if we see an economic slowdown, platinum, palladium, and silver all have a lot of industrial uses. And, of course, copper is an industrial metal. So this was the reaction to the expectation that the uses for silver will be declining. Is that true? Probably yes. But we'll see how that goes. But we've seen a significant decline here. More about to say about this on the daily chart. HG, I was talking about a possible top here, and talking about Dr. Copper being very, very sensitive to economic activity, and economic activity is now looking grimmer. And obviously copper is going down. I've got a possible double top there, which I will be talking about on the daily chart. Okay, let's have a look at that daily chart. And okay, on the gold chart, we've still got an RSI 14 sell signal fixed. It was impressive that it didn't actually fail on this last move up. We're testing the daily middle band as support, and we could be forming a head and shoulders. So that's all fine. So is this going to be a strong decline? I'm doubtful about seeing a really strong decline, but to be honest, this has been a very fast move up. It could probably use a decent retrace, maybe 2600. Nice looking support area here at about 2550, if we're going to see it go that low. Okay, silver. Silver, I've got a possible trend line up here in the 38 area, but the one I'm looking at today is this one I've got here in about the 36 area. I'm wondering whether we might be forming a bull flag, or whether this might be a little double top, potentially take us back down to, on a strong move, down to the 22-23 area. All right, looking at palladium, we haven't really got any more reversal. Sorry, we haven't really got any more sell signals here. They pretty much made target last week. I'm still wondering if we see a strong decline, about a retest of this low here on palladium at 808. On platinum, we're getting to the bottom of the, I think, did that get down to 900? 897. Yeah, we're basically, I've drawn in this long consolidation triangle over the last couple of years, and we've got back to the support trend line. That could hold. If we break below it, then that might be setting up for a retest of 839 here, and potentially this low here at 816. Okay, looking at copper. Now, copper, I was talking about potential double tops here, and here is the potential double top I've been looking at. 520, 537, nice touch of the resistance trend line here. I am wondering about a double top, and if I see a break below, well, that would be about the 390 area. So we'd really be looking for a minimum target, which would be at about the 260 area. That would get us down to here, and within range, but what might potentially be a valid support trend line here. Well, I haven't drawn it in because I'm wondering about that. Anyway, I'm wondering about a strong retrace here, and when you've got economic trouble, you don't expect copper to be doing good things. So hopefully some of you took a short on that, or all that in mind, because at the moment that's delivering, and I'm leaning towards it delivering more. Looking at the HG chart, we've got a couple of pretty grim-looking days. No current divergence. We're obviously getting a little oversold short-term. GDX, we had an RSI 5 sell signal, that's made target. We've still got a weak RSI 14 sell signal. That's not made target. We are testing rising support at the moment. That could hold, and I've got that in about the 4150 area. Looks as though it might be breaking slightly on the hourly chart. So we don't really have a topping pattern to take this any lower, and obviously we run out of the negative divergence now. GDXJ, again, we had an RSI 5 sell signal brewing. Again, that fixed and made target. Again, we're getting pretty close to support, but we haven't actually broken this one yet. If we break down below these, then these could fix significantly lower targets. All right, let's have a look at let's have a look at dollar and ZB. Let's have a look at ZB first. Right, ZB's gone higher here. I've got a theory I want to share with you guys on the daily and weekly charts on bonds, and I'll run that past you. It's not the kind of, I have to say, big moves on dollar and bonds, they aren't the kind of thing that all gets wrapped up by Tuesday. They take months and years, generally speaking. And you'll notice these scales on some of my charts. I mean, my main US dollar monthly chart's like 50 years. And you get patterns over multiple decades. But anyway, I will talk about that. But if we see that play out, it could take a year or two to play out. So I'll talk about that when I'm showing you what I'm looking at there. Okay, DX. DX has gone lower here. I'm expecting it to go lower still, but we might see a bit of a rally here. Let's have a look at that on the bigger picture chart. Okay, looking at US dollar. This is my main US dollar monthly chart. You can see that's the huge high. This was the Plaza Accord to devalue the dollar, and you can see actually it's not really got above the 50% retracement from that ever since. This was an important moment in the dollar, and you can see like comments of mine from 2012 about the bottoming setups here and the tendency to do double bottoms and so on. But here, since then, we formed this very nice looking rising megaphone, and when we hit this high here, which was in 2022, I've then started calling a move, which has obviously taken 3 years so far to get back to this megaphone support trend line in the 96 area. And that is still my target, and I'm looking at what looks an awful lot like a bull flag forming. Now, it might not be, well, it is a bull flag, but what I would say is not all bull flags break up. About 30% of them break down, and I've talked about this before, and when they do that, they can sometimes basically act as the reversal pattern that you haven't seen, because they become the reversal pattern because they break against trend and they tend to play out pretty well. If we did that, that would have a target in about the 80 area, but for the moment I'm really just looking for this move down into the 96, 97 area, and we're making good progress towards that. Short term, I've got a little falling wedge, and we saw a bit of a rally, obviously, on the last day last week, but this is firmly in downtrend. We've made this little head and shoulder target, but I'm thinking a bit of a rally, and we continue down, and we go past this 100.25. Okay, looking at the euro. This is the monthly chart on that. Again, pretty. This is a wedge that starts off at the high in 2008. You can see we've got a pretty nice looking wedge here, and we basically finished last week testing wedge resistance. One, that helps confirm the trend line. Two, if we see a break up from it, then we could be looking at a significant breakup. And again, this could go a long way. This is when we were looking at the dollar down in about the, in the 75 area, 70 area, and so on. This is while the euro is up here. We could be looking at a double bottom pattern to take euro back there. So I'm watching it with great interest. We will see. I haven't finished them. I'm just doing all the longer term charts for a lot of these instruments. Haven't done them all yet, but I did some of the Forex ones this weekend. GBP, I've got a big wedge here, and that has already broken up. Again, we've got a potential double bottom or part formed IHS. On USD JPY, I've actually got this beautiful megaphone here. This is suggesting the dollars that USD JPY is going to go down, which is, of course, what you would expect it to do when the dollar's going down. So I'm really liking the downside here. We've got this nice megaphone, but this could be heading back into the 2011 low in the 75.54 area, and that would be halving basically from this high here. But again, we're expecting to see a sizable move down on the dollar here, and that would fit. USD CAD, not as happy with the pattern setup there, really. This could be, however, a double top. If it is a double top, then a sustained break below 120 would take this most of the way back to the 2008 low. Again, potentially very bearish, and I'm feeling overall I'm feeling pretty bearish about the dollar. Nothing particularly, not seeing an awful lot of sense in the Australian dollar and NZ charts. Let's move on to TNX. Now TNX, I've got a theory. I've been watching this head and shoulders. I was showing it on Sunday last week. This is now broken down, and this would have a target which would be in about the 34 area. Now, how would that fit? Well, I also drew in this line here. I was suggesting that this original bull flag, which had broken up, might be evolving into a larger bull flag. Now, if we were to do that, the obvious trend line for it to get to would be this trend line here, which would be down at about the 33 area, and we've got this big support area at about 32.5. Now, this would please Trump a lot and would very much encourage him on his tariffs front, because one of the things he's trying to do here is reduce interest rates to reduce the levels at which he can roll over debt. So I think ultimately this would probably resolve bullishly and go up. Because I'm just thinking this would be a larger bull flag. We could see a long way down, but I think overall, with the amount of debt that the US is holding, with the very possible unseating, in fact, I mean, Trump's target one of his target tariffs is on tariffs is to get the dollar lower and really to attack its position as the main reserve currency. I think that could backfire very badly for him on bonds, because one of the reasons that foreigners hold 7 trillion in bonds is because the US is the reserve currency. If they start selling those because they don't need them anymore for trade, then that's not going to do any good thing for interest rates. But be that as it may, I'm thinking that there's a pretty good chance we are heading down in the short term to the 33, 34 area on TNX, and we will see. On the bigger picture, I'm thinking we may well be forming an IHS. We've already got one, but I think we might be forming a larger one with the right shoulder forming, and you can see that best on the monthly chart, where this would be basically the this would be the left shoulder, and this would be the right shoulder. There's a couple of options here, and none of them are beautiful inverse head and shoulder patterns, but I am thinking there's an inflection point forming here where, if there is a bond crisis, this could head up to 8 or 9% in pretty short order, and I'm thinking that might happen. Something to bear in mind, but I'm thinking even if the tariffs don't do it, and even if the dollar being knocked off as the reserve currency doesn't do it, I think the other thing is the tax cuts. I think there may be a bond market revolt over that, because one thing that bondholders like to feel is that the lender is paying some attention to the prospect of them getting their money back at some stage. And I think that's just... I think the tax cuts are not going to be viewed... Well, I think they're going to be viewed as basically heading off pretty steadily in the wrong direction. So we'll see how that goes. But I said back in November that I was penciling in a 50% chance of a bond crisis in this year. And I've not really seen anything to change my opinion so far. We'll see how that goes. All right, let's have a look at the KC chart. Okay, KC, I've been talking for ever, it seems, but sometimes the moves just take a while to get going. I was talking about forming a flag here and making a lower low. We've actually seen that lower low today, but I'm expecting it to go a bit lower. I was thinking maybe 350, but this would be A, B, C. So we've made a lower low. That could be enough, but I'd be leaning towards seeing some lower. On sugar, I was reading really looking at the news on sugar on Friday. You'd think I would be looking at the apocalypse. I'm not really seeing much movement on the chart at all. It's just coming back into retesting this low here in the 18.75 area. I think this could be the second low of a double bottom, but it equally could go lower. I think at some stage it is likely to go lower. On CC, we saw a nice looking rally here, a bit of a fail. We could be looking at an inverted head and shoulder, right shoulder forming here. So I'm keeping an open mind. If that doesn't work out, I wouldn't be surprised this heads straight back to the lows. Right, wheat. We saw a strong move down. On cotton. This was a flag, it broke down, and we've gone straight back and retested the low. We've got a weak 60-minute buy signal that's fixed, and I am wondering about a decent rally here. This could be on the bigger picture a double bottom. We will see. On wheat, we retested the low, and I'm wondering whether this is a double bottom. On corn, we retested the low, and I'm wondering if this is a double bottom. On soy, we hadn't retested the low, and I was talking about maybe it was just not going to, but actually it turned around and retested the low. And of course, that's because of the retaliatory tariffs from China, which basically just put 34% tariffs on soy, which is a big export to China. So that's why soy fell, and that has cleared up the retest of the low that I was looking at, thinking that we really should have done that. Okay, lumber. Heading down here, I've got a double top that's broken down, but I've got a target for that on the daily chart. Live cattle is breaking down for a double top with a target in about the 191.5 area. And lean hogs has finally managed to retest this low. This could be the second low of a double bottom, waiting to see what happens here. Okay, let's have a look at the bigger picture charts on those. Alrighty then, coffee. Okay, I've drawn in a flag here. The obvious... This would be if this is a channel, and it's not a bad looking channel, so I am wondering if we might come back into a low here, which would actually be about 3.3 to 3.35 area. Because looking at it, that would be the obvious trend line, but there are other options. It's just that that's all I've really got to work with on the on the chart at the moment. There's always the ones you don't see though. On sugar, I am wondering if this is a head and shoulders, and if it is a head and shoulders, then if it breaks down, then it's going to take us down into 0.08 area. I'm wondering whether it might do that. That would basically involve halving from here, so this looks like kind of a risky long at the moment. Looking at the shorter term chart, this is all the right shoulder. If we see a hard breakdown below the 1750 area, I would be inclined to get out of any longs. Okay, cocoa still looking pretty overbought by historical standards. These are the historical standards, of course. This is a potential huge double top, not of the kind which I see play out to target very often, which is just as well because because the target's pretty close to zero. But it is the kind of one that I quite regularly see break down. So I'm waiting to see if it gets down below 64.27. Looking at the shorter-term chart, we've got an RSI 14 buy signal. That's suddenly reached the possible near-miss target on this move up. Didn't quite make it into the declining resistance, but I'm wondering if we might come back and retest that and then do it, and then possibly fail there and go down again. We shall see. On wheat, wondering about a double bottom forming here. Corn, I'm wondering about a double bottom forming here. On soy, we've got retested the low after the market closed, so I'm wondering about a double bottom here too. Oh no, actually no, we've just retested this low here at 991. In that case, I'm wondering about 955.4. We haven't reached it yet. All right, cotton, wondering about a possible double bottom, and lumber, we've got a double top which is broken down, and if it sustains the break, that's got a target in about the 510 to 520 area. All right, so we shall see. Anyway, fascinating week last week. I think next week's going to be pretty interesting as well. I am leaning towards just looking at the history, because you always look at the history on these things, particularly rare occurrences. It's well worth looking. This rare occurrence has a very, very, very strong tendency to make a low shortly afterwards and deliver a rally that takes weeks. Now, I know it may be hard to imagine that right now, but nonetheless, that's what history says, and it was pretty hard to imagine in all of these other cases as well, and yet it happened. I'm thinking we're making a low. I've given the targets, ideally, which we would get to on SPX, on Qs and Dia. I think we've got a pretty good chance of seeing that rally that I projected earlier this week. We will see. And after all, remember, all of these targets we made on Friday, I called them on Tuesday and Wednesday. I wasn't expecting, I must confess, to make target on them quite so quickly, but I was thinking that if tariffs came through as expected, as I expected them to, then all those targets were on the table, and they were all made on Friday. So we shall see. I'm thinking I'm probably right about the rally as well. Only one way to find out for sure, of course, and that is to live through it. But I'm looking around for a low here. And I'll be looking around particularly for a whole load of early buy signals on the futures. If we get those, then, that would be very encouraging for a rally. All right, brilliant. In that case, everyone have a good rest of the weekend, and I'll catch you guys on Monday.